Hey guys, hope you've all had a good day's trading. My name's Tom. I kept the introduction in again after the prior week, just in case you missed it. But I am one of the juniors funded, and I'm going to talk to you today about a gold trade I took off NFP, breakout trade, and just break that down for you, my thinking, what my idea was in the execution. But yeah, Tom graduated the course in September 2020. Completed the funding trial earlier this year, went live. I'm a momentum trader, breakouts, reversals, wanting to trade high volatility markets and high velocity in the book, with a profile focus in terms of generating my ideas, and mainly in gold, oil, SPU, bund, and now looking in the book stall as well. But I've not got a trade for that to show you yet. The trade was off the NFP number. It wasn't an instantly off the NFP, but it was a breakout trade with the basic idea of the fact that we'd had the failed break of the inside week. We'd then, after the Fed rotated back up, had a Bank of England day the next day and put in a really strong reversal candle on the daily, built value back up. And I was looking at these poor highs, very balanced profile, play a breakout of the prior day's high. I'm going to talk to you about the access, the importance of the bonds, primarily 5-year, in allowing gold to be able to bid and actually do the trade. And that prior to that, it was sort of maybe holding gold back a little bit. It wanted to bid, but it couldn't. Show you the footprint, what I was leaning on, and then a bit of the order flow. The basic idea, as I said, was the failed break of the inside week to the downside. And we were rotating back through the profile. They had a very blocky high, and so I was expecting a reaction through it. The prior day's high was a selling tail, but we built value and accepted time back up in the sort of 1800 zone. So I wanted to see if this NFP number would bring the participant into market to sort of drive gold up. And I had sort of quite a clearly framed trade that I wanted to take with this wider sort of idea in mind. The daily time frame was a big part of it. We had this sort of big red down day and then equal green up day. So quite a strong reversal pattern on the daily. The prior day, the delta was hugely negative. I think it was negative 15,000. And this, you could really feel this in the order flow. It felt heavy, was struggling to bid. And I'm not sure what that was. I don't think that's really important, but that was giving me the thought that there would be a reaction through the prior day's highs if we could take it on the right order flow. But the basic idea was the breakout of the prior day, looking up to a prominent VPOC on a really balanced bikini profile. Because I felt that was those were the ticks that I could take with conviction, and I was trying to get size on, but I will show you and speak to you about what happened in that sense. So yeah, these are the profiles. So we've got the failed break of the inside week, rotated back after the Fed didn't act, towed the line quite well again. We got the taper started, but they really pushed back on any rate expectations. So gold's rotated back through the whole weekly profile and is now trading towards the highs. So I'm looking at the inside week high and the outside week high. These are quite a long way away, and I'm not really sure whether gold's capable of this NFP number. So hence the reason that I'm looking at this prior day. So this was the day before's high, playing up to that prominent VPOC, because it's a very tight value area. I felt that that should be sort of the easy ticks to take in this trade. If I'm then getting up here, it's failing, and I'm holding all the way back, those are quite big tilt causes for me, and I didn't really want to make myself vulnerable and subject myself to that. I highlight here the need for time. This is quite a big selling tail, and was actually put in off ECB, the ECB day the other week, where gold broke up and then the bonds sort of reversed. And I felt like bonds had dragged gold back down, because the correlation was quite tight. So I wasn't sure how it was going to react in this tail. So that was sort of a different part to the trade. But the high conviction ticks were from here to the prominent VPOC, the first stage, I suppose you could say. And so yeah, these charts are from the morning of the NFP day. So yeah, I'm looking at, we've taken the day before this sort of block, which before we sort of rolled over on the Fed day. This high here, which is from that bikini profile, also the inside week high, and then the outside week high. So how we trade in this zone, I don't know. These were not where I felt like I had confidence. I didn't know if we were going to get up there, fail back down to the balance. Because it had done quite a big move from low to high on the week to then go and take the outside week high. I wasn't massively convicted. This is the, sorry if I'm out of the way, this is the daily sort of reversal candle. You can really see big red down day, big green down day, sort of real rejection of the downside. And yeah, so we're just looking at that zone, and then the outside week high. And the delta, I thought this was massive because the size of the move that we've done, and you could, as I said, you could really feel it in the order flow, that it wasn't sort of just, the bid wasn't just creaming through. It was very passive buying, but then someone clipping into it on the way up. So hence the really negative delta. But we managed to close strong, hold up here, build some time, shift value. So that was quite key for me. So yeah, going into this NFP, I wasn't really sure the relevance of it because previously we've been looking at NFPs in terms of if we get good numbers, does this mean the Fed's more likely to taper? Now we've already had the taper done. I wasn't sure what it would mean. Is it going to be a risk on, risk off scenario, or how the market's going to interact with it? So when prepping, I wasn't massively interested in the number. I was obviously aware of what was expected, around 300K. But I wasn't massively interested. I more wanted to look at the markets and how they traded. And if the flow was there to play into my idea, then obviously I'd look to take a trade. But yeah, I wanted to be very patient. I wasn't looking to, if it is going to be X amount, I'm going to hit. I wanted to really let the market do its thing, wash out, and then settle, form some structure I could then use to play off into the wider idea. So yeah, the idea recap, just to go back over that. So it was a continuation of the failed inside week. Really keeping that in mind is something that I'll talk about in a bit, but it's something that I sort of lost the higher time frame view. Once executing, getting out the trade, I then sort of sat back, didn't think about whether this trade had more to go, just accepted, okay, the high conviction ticks have been done. But really keeping that in the back of your mind, having executed and got out, or however you traded, is important. So I was looking for that breakout of yesterday's high, trading up to that prominent VPOC as my high conviction ticks. And then to sort of step back. So the criteria I really wanted to see was with the bonds. I felt like for gold to be able to do this trade, it needed to be going with the bonds. I couldn't be battling against the bonds, trying to trade gold to the upside. So this was massive. And another thing, as I said, was off these numbers, you get quite a big sort of washout in positioning. The market can go up, down, and really sort of become very difficult to frame your risk and to trade. So I wanted to let it settle, let the book firm up a little bit, and actually be trading in a way that I could understand and frame my risk off, structure-wise and order flow. So I want to see an order flow pattern that would give me the go-ahead to get in, and I will show you this in a bit. But yeah, this was the question I sort of had in the back of my mind, was trying to keep in the back of my mind. When looking at the book, do I want to be involved? So that's, if it's very scatty price action, very flicky, so it's hard to control your risk, hard to get access in, and actually hold it. If you're going to constantly be puking a 10-tick loser, there's no point in getting in. You want to be getting in when you think that the momentum's really there and you're going to get put on side quickly and you can then manage. But yeah, these are questions around the wider idea. So we'd had quite a big move into this day, into this NFP day. Was I expecting too much? Just a very basic question. If I do wait, as I said to you, I wanted to wait for the market to settle. I wanted to wait for some structure to form to be able to play off. But if I do wait, will I maybe miss the trade? Are we just going to erupt off a big number, or what will the market do? I'm not sure. And that bikini profile that I've highlighted, how are we going to interact with that? Because of the size of the tail to the upside and the fact that it sort of started this leg down into the Fed day, I wasn't really sure whether there's going to be a participant in there that's going to step in and just drive the market back down. Like, is it going to get into the value area and just fall straight back out of it? I wasn't sure. And what relevance does this NFP have? As I highlighted earlier, prior to the Fed tapering, it was all about the taper. So now where does this NFP stand? Okay, so I'm going to show you the order flow here, if I can. Cool. So I'm starting this at 12.25. Sorry, 125. The NFPs obviously happened, and we have done the flush down, and we're trading back up. So we've actually been trading for about an hour after the NFPs actually happened. So there's been a decent amount of time between. But I just want to highlight these 100 lots down here that came on and then flicked off, and then these 100 lots that come on here and then get pulled. So I think that was a bit of spoofing, but this sort of gave me the real sort of that need to be involved. I'd already tried a couple of times low down, and this was where I was like, okay, I need to make sure I'm involved. This was the high of the cash range, so sort of a trigger point for the market to release through, I felt. And remember, we're targeting that V pocket 04 to want to give the market maybe a bit of time around there to see if it wants to continue straight through that bikini profile. But I don't want to see it go up and fail back down. If it does, I'm going to get out. So we get 66 taken at 99. Market comes back, holds the price. The price action picked up a little bit from earlier, so you're getting a lot quicker interaction between the bid and the offer. And this is a significant level up here, the 1800 level. And I'm putting a stop in, if I'm going to be honest, because of the fact that I had already taken a couple of losers and I didn't really want to see this fail straight back down as it had done previously. But the price action's changed, so I should really have been focusing here on maybe trying to get more size in. But I was of the mindset that I didn't really want to take a big loser here, which is not really the right mindset, so it's something I'm trying to work on. So here's the target price, the 1804. I decided to put my take profit a little bit higher in case we do get a real flush and stops through there. You can see silver is also pushing the highs too. It's a shame I don't have the bonds on this screen, because this is something that's my mouse is flicking to, as I'm constantly checking what the bonds are doing. They're holding the break of their daily highs, which I'll show you in a slide coming up. You're seeing gold break up and hold higher prices. It's not doing the really washy trade that it can do when it's still stuck in a bit of a range and causing people problems to get positions on. And we've gone up to this level quite quickly, but you're seeing buying continue. We've got this pocket here. We've got 60 taken at 35s here. Coming up is what I want to highlight when you get this sort of flush up. This 100 lot up here at 1805. Now here I'm thinking we're starting to stall. I want to sort of tighten up my open P&L risk, because I don't want to see this come straight back down and sort of catch out these longs. But I also at the same time want to give the market some room. As I said, I didn't manage to get a second lot on, which I had planned to do through that 1800 zone, which is frustrating because you can then give the trade a bit more room. Okay, I'm out there. So the management of this trade, I was not, what's going on here? Okay, we'll go to this. But yeah, the management of that trade I was not particularly happy with, and it was something that in my weekly debrief I really looked at, because I felt like, firstly, when you had that sort of those 100 lots come on the offer and get pulled at such a key zone after a big number, and you've got all the correlation is going the same way, that is the time to be sort of acting and trying to get your size on. But I'm happy with myself for not sort of chasing up, because that can skew your price and then put you under a lot of pressure, but I felt like I needed to get my size on earlier. Another thing also is this shifting stops. You're trying to, in doing that, I'm trying to sort of manage my open P&L better, because there have definitely been trades where I've given way too much of a trade that I've been in on nicely on side back. But at the same time, I think that it's not necessary. You're watching the market and your focus needs to be on the market. And when you see price action, you maybe think that it's not confirming, or you're seeing the price action fail, then you clip out, either with a take profit or you just hit at market to get yourself out. But yeah, so this is what the market looked like at the end of the day, and I'm going to hit the lower time frame to show you just a little bit more in the way it traded, and what I just showed you was just the breakout. So off the number, we actually counter auctioned down, putting a massive buy and sell into the single prints from the prior day. And this was with the bonds as well, it all flushed. And this was really important to this trade, because I felt like this bit of information, when we were then trading back up here, which was 98, so that was the prior, the prior cash high was in around here. Sorry, the cash high on the day was in around here. So, and that was the high that we were looking to target. So this was where the cash high was, and this was the high that I was looking to target. So that's the way I just showed you that spoofing. But yeah, so it counter auctioned yesterday's buying, and they came straight back. And this was, I think, partly to do with the bonds as well. And then we went up to here, which was the bit I just showed you, failed, came back, and it did quite a deep retracement, which was kind of tricky. And I don't know if that was because of the fact this needed some more time in it, or it was to do with just the fact that the market was quite long and it needed to come back and find new buyers before it could then go for the second leg. But yeah, we did end up taking the Bikini profile high and the outside weak. Okay, here's the tail, and this was the flick up that I showed you, just there. But yeah, we did, over the course of the day, do the trade and take that outside weak high, leaving the market looking pretty strong, taking these ones. And that flick, I think, can maybe put you off a bit initially, but I think that was really important information that the market had managed to do that and buyers had stepped back in. So yeah, I looked at this trade as having two parts. The first breakout that I showed you, whether you got that price action, you could take up those sort of high conviction ticks to the prominent VPOC. And then the second one, when the market failed, rotated back, and then found more buyers to then get it back on to do the rest of the trade. And that's what I was saying earlier about the fact that keeping that higher time frame picture in mind is so important, because I switched off, if I'm going to be honest, after this bit of the trade. Whereas I should have been questioning, what do I need to see now that would get me back involved to be able to access the rest of the trade? Say, seeing it go through here, this high that we put in with good order flow volumes, the footprint, the bonds continuing to bid. Yeah, there was frustration for sure in myself that I didn't keep switched onto the market, but I'm going to show you these two. So I quite like looking at the scene of the crime as like quite a nice reference point. But this was the initial flush down with the bonds. We then picked it straight back up, back through the scene of the crime, and failed back here. But you get these little structure in gold, and you can get caught up in these very easily and do quite a lot of damage because of the way it's trading. It's very that flicky price action. But what was massive to this, and the bit that I just showed you, the breakout of that zone, was the fact that the 5-year had taken its high, retested and held. And this was a big factor in, I think, allowing gold to do the breakout of the trade. And this is the footprint from that. So waiting for these sort of real absorption blocks where you see that there is a lot of interaction, and then you get this, which was the rotation of the breakout holding in this zone. So if you can have the patience to wait for these things, you can save yourself a lot of pain as well, trying to pre-position for breakouts. Oops, sorry. Okay, and this was part 2 of the trade. As I said, I showed you this bit, and in here, I'll show you the footprint of it, but we get a nice block about 1801, which supports, it was in here, a nice block of absorption which supports for that second leg. You don't need to be preempting down here. Like at this point, it's sort of 50-50 whether the market's going to fail back into the initial balance or going to do what it did. But it does give you a nice little double bottom on the 1-minute chart if you're looking to preempt. But then I feel like this was the best place to access. You get a nice sort of sideways block on top of the absorption that I'm going to show you to be able to play into that second leg of the trade. And this was the outside weak target up here. which once it did take the time to sort of block out this zone, put some volume in there, didn't take very long to trade from here up to the outside week, about an hour and a bit, and that completed sort of the trade. And this was that block of absorption. Cool. And this is sort of the last bit that I want to sort of really make a point on. The bit of the trade that I showed you here and the 5-year. Gold was really struggling in here. Like, it was holding and it was shifting up, but I was really struggling to get a position on in here and in here, because you had to have the conviction to sit offside, onside, offside, onside, with the fact that the bonds were holding a strong bid. But this candle and this candle here, the one I've highlighted, was when the 5-year had taken the high, rotated back, and then broke up on a really high volume, and that sort of enabled gold to do that breakout. So really keeping an eye on your correlations, to sort of just give you the confidence to hold a position, because you're not wrong in either of these scenarios until really below here. But that's a lot of risk to give it, and that's not going to make you very comfortable, and it means you can't put any size on. So yeah, looking at other things to give you the conviction to hold through the chop, or play the breakout, because you then have the conviction to put more size on the break with order flow that you understand. Okay, so yeah, key takeaways for me is the keeping it simple. I've done a couple of these NFPs where I've overcomplicated it. If it's this number, I'm going to do this, this, and this. And I'm really now trying to just keep it simple. In this case, because of the fact that I thought the macro context had changed a little bit, I wanted to give the markets more time to show me and for the information that I could get from that. But yeah, keeping it really simple. I thought that was a very simple trade. I knew what I wanted to do to access it. I took a couple of losers trying to access to preempt the break, but then resolved to just playing the breakout when the price action I understood was there. Yeah, patience with the correlations, because throughout that gold and the choppy parts of the trade, I was keeping an eye on the bonds, and the bonds were bidding. The 30-year primarily was really making a move, and had broken the highs of the day way before gold broke its cash high. But yeah, giving it patience and letting all the bonds be breaking key levels to then think that gold will go with it. And yeah, as I say, keeping the higher time frame view. Once the trade's done, questioning, what do I need to see? What do I think the market's trying to do? Does this trade have more to it? Because if you've taken the high conviction ticks, that doesn't mean you sit back and sit in your hands, especially if you've got this wider picture. So to sort of use the information that you've got from that breakout to form sort of another trade, I suppose. But yeah, thank you very much, guys.